Hi, I'm Brian Spinelli, Chairman of the Investment Committee at Halbert Hargrove. A hot topic has come up in recent months and years over the topic of cryptocurrencies. How should investors view Bitcoin as an investment? To better answer this question and hot topic, we've asked Erik Ristuben from Russell Investments to address some questions. Erik is very knowledgeable about money, banking, and how cryptocurrencies may be shaping our future.
I'd like to start out with a quick hello to the clients of Halbert Hargrove. My name is Erik Ristuben. I am the Chief Investment Strategist of Russell Investments, and my friends at Halbert Hargrove have asked me to share our thoughts and views around Bitcoin with all of you. I have a 28-year-old son, so I've been hearing a lot about cryptocurrencies like I think most of you have, and been following the stories on CNBC and a lot of other places. It certainly is an area of interest for the market and a subject of active debate. Let's take on Bitcoin as an investment. At the end of the day, we view Bitcoin as a speculative investment, and it's important because words mean things. And speculative, the definition is the decision and the action is based more on conjecture than knowledge, and I think that's kind of a nice way of framing it. And then obviously the other part of speculative investments is that they carry a high risk of significant loss. And let's put that in the context of Bitcoin. Bitcoin, at the end of the day, is speculative because there are things that are not knowable. And I think Jamie Dimon, beyond his maybe overly direct initial statements around Bitcoin, I think he's asking ultimately the question that a lot of us in the investment industry are asking. The thing we do not know as it relates to Bitcoin or any other cryptocurrency is what happens when they become big. Now, I appreciate that a lot of you may be saying that Bitcoin at its peak had a market capitalization of $250 billion, and that certainly is a lot. But to give you a sense of it, the M2 money supply in the United States, which is highly liquid money, is around $14 trillion. So, and that's the issue is that the competition for Bitcoin and the competition for all cryptocurrencies are government currencies. The use of sovereign currency is a critically important tool for governments to manage their economy and to control their economy in terms of what happens in their borders. The focus on the Federal Reserve gives you a good indication of how important monetary policy can be. The question becomes, Bitcoin and all other cryptocurrencies are competitors potentially to the U.S. dollar or the Japanese yen or the Chinese renminbi. The question becomes when those governments become concerned about the activity in Bitcoins, what are their steps going to be? And we've seen evidence, right? We've seen in China that there has been a restriction in terms of virtual trading. You can only trade Bitcoins on an over-the-counter system, which is a clunky and not particularly effective way of trading. There's rumors now that the Chinese government may be cracking down on new mining operators. Today, interestingly enough, right before I came on, South Korea has been talking about potentially banning trading in Bitcoins. And again, that's the biggest threat in our mind to Bitcoin in terms of its potential long-term value is are governments like the United States, China, South Korea, and others, are they going to view Bitcoin as a potential threat to their own monetary system? It seems almost inevitable that every central bank is eventually going to create their own version of a cryptocurrency to actually compete versus Bitcoin and the other cryptocurrencies out there. And probably the reason is the blockchain technology.